Hey everybody, welcome to the garden. I hope you're having a great day. Shout out to the lemon and lime lovers and everybody in between. It's time for a crypto highlight video. And if you would like your own highlight video for an asset of your choosing, make sure to join the Discord and post in the stock crypto highlight room. And if you would like to become a member of any of my services, make sure to check out the links in the description below, both the Patreon and the Discord. And remember, being able to request me to look at an asset is only available to all members until the end of this month, end of November. Once that free trial ends, it will go behind the premium wall, and only paying members, only premium members, will be able to give me suggestions to do exclusive videos on assets just for them. All right, so looking at USDT dominance. So this was requested of me by a member of the Discord. So essentially they wanted me to take a look at the USDT dom. Now you can't, all right, so now charting dominance charts, in my opinion, isn't really that viable. Now you can come across coincidences, okay? You can come across coincidences. And yes, there are times where it feels like it does work. What I would say is this. Now, what works on dominance charts are uptrend, downtrend lines. All right. So uptrend, downtrend lines are very important. So something like this on USDT, let's actually do array to make it very clear. So off the monthly time frame, you can do a USDT uptrend line, and also like ascending and descending channels. Things like this will work because what you're doing is, in that sense, you're measuring the health and dominance overall of an asset, the waxing and waning of the dominance. Now, will a bull flag play out? It might play out sometimes, but it's not really the bull flag playing out. It's just the dominance changing, because what can happen is, well, someone can print a ton of Tether because they deposit a ton of US dollar into Tether. Okay, at least that's the idea. So a bunch of Tether would come onto the markets and the dominance would increase. And then vice versa, right? You're taking away, you're burning a lot of Tether because you're now selling out of it, going into another asset or just US dollar. So you can have the uptrend, downtrend lines, you can have the ascending channels. I believe that works just fine. But other than that, I don't think standardized TA is going to work. Now, you can also measure how parabolic something is in this sense. So like, let's say we were in a channel, right? So let's say this is a channel. So let's actually redraw this on the monthly, and we'll go from this low to this low right here, and then we pull up to this high right here. Or actually, we'll go to this high here, right about there. Make it as clean as I possibly can, right here. Okay, so let's say that this was your fair value channel. So if you actually look at my market recaps, I'll have on the S&P chart a fair value channel. And what that means, it's pretty much like the measurement of the healthiest uptrend, right? Because when you go too parabolic in an asset, it's nice. It's good to be on the train. If you're not on the train, get out of the way. Wait until it shows signs. Wait until it actually begins to fail on that parabolic uptrend. Same with the downside. But once it gets into the fair value channel, it should be a signal that, okay, now we're in a healthy zone for this asset, and that if it does rise, it's going at a healthy rate. Okay, so every asset will have its times of being unhealthy, where it goes up really hard, or goes down really hard, and then pulls back from those deviations back into a fair value. Now you can use a channel, you can use the VWAP, the volume weighted average price line. There's a lot of ways to do it. For me, I like doing the VWAP, but I also like doing a fair value channel, and that's how I would do it with the USDT. This is where, in the past, it seems like buyers, sellers, or people were comfortable with the current USDT dominance level in this area. Okay, and now we've pulled up to a whole new zone. All right, we're going parabolic, and this would explain some things in regards to what Bitcoin's done since really since 2017. You're having a massive move higher as we go through pretty much 2021, 2022, and now we're potentially showing signs of a pullback here. And that, to me, is a good sign for crypto. Now, what the general idea is for Tether is, the more Tethers printed, you would assume one of two things or both. Dollars being sacrificed for Tether, so you're depositing USD and then you're transitioning to Tether, to the stable coin, to prepare for either a futures play, so whether you're going to go long or short, or if you're looking to hold the stable coin waiting for good prices on whatever crypto asset you're looking at, or you're in crypto and you're selling out of crypto into Tether, right? And that's really how I see it. That when Tether's going up, it usually means prices of crypto assets are going down. So it's very inverse, right? Similar to how the US dollar is. When dollar's going up, usually US stocks are going down. So that's how I see Tether interacting with the markets. And as Bitcoin has gone down since really the 69K, it makes sense that you're having Tether kind of just trending up and up. And now we're seeing some signs of potential slowdown, right? We have about 3 days of this monthly candle left. Now, if we do have another month where we kind of close like an in bar, right? Or we have a nice bearish close kind of under this candle here, you're showing signs of a topping structure that will eventually potentially break down towards this fair value channel, and that will probably lead to a nice rise in crypto. So that's what I'm really interested when I look at this chart. We're seeing signs of this is very steep, right? It's very, very steep, so it's very likely that we do have a pullback at some point. Now let's go down to the weekly, see what we're looking at. So look at this. So off the weekly, we had to break out. We actually came back down, held this channel, and then are showing signs to break up higher. We actually couldn't take out this high wick, so technically we may be making another lower high. There's almost like a double top structure to then break lower, taking out these lows and then breaking into the channel again. All right, so this is a great sign if you want to be bullish on crypto. And this weekly candle that we're in right now, again, we have about 3 days left in this, so both the weekly and monthly will close. This is a very bearish candle if it can close this way. You have a nice doji, not a super bearish doji, but you do have a potential bearish engulfing candle here depending on how this closes. So overall, I have to tell you, like, looking at this, I'm potentially seeing the beginnings of a topping structure, which should lead to a rise in crypto if the thesis that if Tether goes down, crypto goes up. If Tether goes up, crypto goes down, right? So if that thesis does play out. So I'm very interested to see how this goes. But again, I can't really chart this normally. I just have to give you what macro the markets will probably do in each scenario. So if we do have some downside, look for Bitcoin to be probably making that move going towards 17, 18, potentially even back towards the 19, 20,000s. Now, this doesn't mean it's we bottomed out and we're going to the moon. It just means that for a period of time, maybe just the month of December, half the month, the whole month, who knows, you're gonna have some upside in crypto, which again, there's some signs of this. If you watch my market recap that actually I just put out recently, you'll see it. Like, I go through like ideas that we should see a bullish month, but we're also coming into a major time of volatility because there's gonna be so much geopolitical and news just kind of swirling around the first week of December that a lot of this can change. So no matter what the market the charts say, just watch out. The right word, the wrong word can really swing all the charts in a whole different direction that we're not seeing yet. Okay, but look, this looks like a double topping structure. So let's actually make this channel red just so we know it's off the monthly. So we'll keep the same energy that I'm like with the other charts. Actually, I don't know if this is doing it. Middle line will be red. There we go. Okay, and then the channel will be red as well. There we go. All right, so yeah, we'll keep this red so we know it's off the monthly time frame, and then we'll actually have this. We'll have this trend line here, this horizontal ray. So this is going to mark the high, which it's going to be black, so we know it's off the weekly. So we have pretty much like a double top structure right here, and then let's go down to the daily and see how it looks. So daily, pretty interesting. So daily actually, so in the right context, you could almost say that this could potentially be a very large bullish structure, but it's not. It's clearly not. This does look more like a topping structure to at least come down and potentially take out the liquidity under this level here at 6.72%. So anyone who's holding Tether, looking for more downside on crypto, may end up having to jump into crypto on the move up. Because Tether comes down, crypto will go up. So if they see that, oh man, Tether's coming down and now Bitcoin's going higher, once this level gets taken out, this would be the equivalent of them getting stopped out. Like, all right, I have to chase after these upside assets. We have to chase after them. Now, that's not a good thing to do, but that's potentially what I would like to be the behavior, right? Because you can't put a stop loss here. It's a dominance chart, but that would be the behavior behind someone who's looking at this chart and it's like, all right, I think crypto's going to go lower because USDT is going to be going up, but then they're wrong. It breaks down. They're like, okay, I have to chase after Bitcoin because now it broke this low. It's probably going to come lower, right? So that would be the mentality behind this, in my opinion. That's how I would look at it. So, if we do have the continuation under this level and we come, I guess you can try and use a fair value gap if you want to say it's going to work. There'll be a fair value gap below at 7.24%. So, again, that does lead to more upside for crypto in theory. So, I am seeing an idea that we are potentially going to see Tether come down in dominance over some time, and you're going to probably get more dominance in crypto. Bitcoin, Ethereum, though their dominance will rise, so their prices will rise as well. So I'm liking this overall, but just be very careful when charting dominance charts. You can't really look at them how you would a normal asset. It's the same thing with the VIX. They're kind of designed to do certain things. The VIX is designed to come lower. It will have its spikes up, but it actually rolls lower. The contract will roll lower over time. It must. Same thing with dominance charts. As the overall environment, the overall crypto economy grows, and if Tether's going to be a part of that in the future, this will grow. The dominance chart will have to go up. Okay, so you have to keep that in mind. Like this must continue to rise if we're going to have a Tether dominated healthy crypto market. Now, this doesn't mean that crypto market needs to be dominated by Tether to be healthy. It's just as we know it now, Tether dominates this market stable coin wise. And if that's going to be the status quo for years to come, this chart must go higher. So just keep that in mind. If it's not, whether crypto's dying or just a Tether dominated crypto is dying, then this will go to zero. And no matter what TA you do, it's going to do it. So just keep that in mind. I keep saying that over and over, but I just want people to understand, like, no matter how many lines I draw here, no matter what I'm seeing, whether it's fair value gaps or potential liquidity, it's not at the same weight as if I was looking at the Bitcoin chart. But we can get behavior from this, right? So that's why I mentioned if we come lower, watch for people to chase price as we come down towards these levels. And then smart money will start printing Tether again by selling their crypto. They'll be selling their crypto because in that scenario, in theory, it's likely crypto will be coming low. Crypto will be going higher as this comes lower. And off the daily, I don't really see anything per se. You have some trend lines going up here. I guess you could have this trend line right here. That would be fairly significant if lost. So right here, we'll make this blue. So this is a fairly significant trend line on the daily. If this is lost, then it's very likely we're going to be at least making a move back towards the top side of, I would call, the fair value channel at this point, or at best for crypto, maybe at worst for Tether, depending on your point of view, coming all the way back down to the median line. So pretty much this consolidation down here and trading at about 4.5%. Because you have to decide, like, what dominance should Tether have, right? What dominance level should Tether have in the markets? And that's going to change, based off of the usefulness of Tether and the trust, right? Because if you really trust it, you want Tether to have a pretty high dominance, right? You'd rather it be the main stable coin with as much liquidity as possible. If you don't, then you want it to have a very low dominance, because then it can do the least harm if it does end up failing. So you have to really think about this for yourself. But right now we are in a very, very Tether dominated crypto market, because again, you can't really trade futures without it. There's very few exchanges that will allow you to trade futures without Tether, and even the ones that do, the liquidity in those other stable coins is so much lower that it's almost it's not impossible, but it's almost impossible to do it consistently. Okay. All right. Well, that's everything for the USDT dominance chart. I'm sorry if I didn't really give you that much info. It's a little difficult to go over. Hopefully you got something out of it, especially the person who recommended it. I thought it was a great recommendation. I think it gives us a really good idea of kind of like how we can measure some actions by some market participators, but it is hard. It's not the same as, like, looking for liquidity levels on just a random asset. Yeah, and yeah, that's it. Again, guys, if you like the content, make sure to give me a like and subscribe. It really goes far. It lets me know that I'm doing something right. And if you have any advice for me, whether that's constructive criticism or just a pat on the back, I don't mind that either. Leave a comment down below. Let me know what I can do better, and let me know what I'm doing right. And make sure to join the Discord. It's a free Discord. We have some great people in there. It's growing every day. And if you like any of the services I provide, make sure to check out the Patreon link and read the tiers. I try to be as thorough as I can there. They should answer most of your questions. If you have any more questions, be on the Discord, contact me, and then read through the rules as well. They should answer all those questions. All right, everyone. Remember, be patient, be vigilant, and be nimble. I love you guys. Take care. Bye.